Hi, this is Eho. I'm a option trader. Today is 2026, January 23. Okay, let's take a step back and look at the market and then talk a bit about Japan's political environment, especially the snap dissolution of the lower house. I'll start with the Nikkei. And the Nikkei closed the previous session at 5369 a.m. About 3 days ago, we saw a sharp drop, briefly touching the 51000 level, but the market rebounded very quickly. Yesterday, the intraday night reached 54000, and as of now, the index is trading around 53780. Although it still looks very strong. Volatility has picked up again with the rally triggered by the lower house dissolution. The volatility index is now about 29.6, basically hovering around the high 20s to low 30s range. The PL is about 20 times, which is still a fairly healthy level. EPS stands at 2675 yen, also maintaining a relatively high level. From an earnings perspective, the market remains solid. And now, looking at interest rates, Japan's 30-year JGB yield is around 3.64%, and just 2 days ago, its briefly climbed as high as 3.85%. There's been some discussion in the media about instability in the bond market, and we have seen comments from policymakers, including Minister Katayama. In Japan, right now, inflation and rising price, especially the surge in rice price, and becoming a serious political concern. How the government respond to this will likely be one of the key themes in the upcoming general election. Other roots of this issue is the weak yen and global market fluctuations and having a direct impact in Japan. And from the perspective of currency credibility, international attention is clearly focused on the yen. The dollar yen rate is currently about around 1583. The weaker yen trend remains very strong. Turning to the US market, the S&P closed at 6913 and the VIX is around 15.6, which suggests relatively stable environment. The U.S. market showed some weakness earlier, but it appears to be regaining momentum. That said, the asset showing the strongest momentum right now is gold. Gold has climbed to around $492, and the momentum here is extremely strong, probably one of the strongest moves we have seen quite some time. The GBZ is around 28. Gold sometimes rises out volatility, but when it rises with higher volatility, it often signals underlying risk. The fact that gold is rallying while GBZ remains elevated suggests that the market is pricing in some hidden uncertainty. Bitcoin, meanwhile, is trading around $89600, especially moving sideways around the 90000 level without any major trends. US 30-year yield has not moved significantly either. Up until last week, the Nikkei was clearly the main driver of the market. Now it looks like some capital is rotating into gold. That tells me the market may be starting to price in risk, at least partially. Okay, in Japan, the lower house has been disturbed, and the general election is scheduled for early February. My base case is the LDP, led by Prime Minister Takaichi, will likely win a solid majority. There are reform-oriented alliance forming, But given current public sentiment, a major surprise seems unlikely. That said, I'm not convinced the election outcome itself will have strong positive impact on equities. Prime Minister Takaichi leans more toward a state capitalist approach rather than aggressive uh, li- distribution or stimulus aimed at a household, compared with the previous administrations that em- emphasize globalization and asset price support. This shift could dampen the equity rally we've seen from 2023 through 2025. On the other hand, Japan's resource-related equity story, including a rare earth, could gain traction. So there are areas of relative strength. Still, at the household level, conditions are clearly tightening. Personally, I've noticed a few people going to convenience store in the morning, even in my own neighborhood. That kind of the behavior usually reflects growing consumer frugality, with people cutting back, starting from daily necessities like breakfast. This kind of behavior can eventually suppress inflation and push the economy toward a more deflationary dynamic. If the Bank of Japan continues rising rates, the long-term trajectory should move toward a stronger yen, lower import price, and lower inflation. But before that happens, we likely need to go through a phase of the reduced consumption driven by cost pressure. I think we are already seeing the early sign of the transition. From a market perspective, this means the extremely strong equity environment we have enjoyed may start to change. In fact, foreign investor flow data shows continued net selling by overseas investors. Price remains high, but foreign money is gradually existing, and that's something worth paying attention to. Personally, I still see the markets are largely range bound even after the rebounds from 51000 to 53000. I don't see a clearly path to 60000 in the near term. This looks more like a move within the range rather than the start of the new leg higher. The combination of strong Japanese equities and relatively weaker US equities and rising gold price is sometimes something I'm watching closely. With major events like election in the upcoming Olympic and Italian, this is a period where the focus and the patience really matter. That's all for today. Thank you for listening. I'll be back tomorrow. See you.